Let's zero in here on Celestica. It has become an artificial intelligence darling. The hope is that it will make elaborate arrays of equipment for companies that will then in turn run artificial intelligence programs. But with the sell-off in that sector today, it's under major pressure. Let's get more from Stephanie Hughes of Bloomberg. Stephanie.
Hey, Andy. Yeah, you can say that again. So shares of Celestica fell by as much as 29% today, and that was just when I last looked at my terminal there. It might have even fallen even further, but that eye-watering double-digit drop was the biggest intraday drop since the onset of the pandemic in March 2020. So Celestica, which manufactures electronic components, really got caught in that tech market rout that we're seeing today, just based on that Chinese AI startup called DeepSeek, which introduced its newest model, and it topped the Apple App Store charts there. So DeepSeek's model is really emerging as this strong AI contender with a lower price point, putting the hundreds of billions that mega tech companies like Microsoft, Alphabet, and Meta into question, just because these models can apparently be developed for even cheaper. So this also had an interesting knock-on effect against other sectors as well. We're also seeing TSX listed uranium names in the red, like Cameco and NextGen Energy, and a few others that were on the worst performers list on the TSX. So uranium has been touted as this low-carbon energy source for that would fuel the next leg of AI development, and that's where a lot of this spending is being put towards there. So in Celestica's case, going back to that company specifically, the challenge that DeepSeek poses to North American AI dominance is what's causing Celestica to really lose weeks worth of gains there, Andy. It's a really interesting story.
What's the story with GFL Environmental?
Yeah, so shares of GFL grew by 3.4% today. That's nearly its biggest intraday gain in about 3 weeks. And this is because Citi has initiated coverage on the waste management company with a buy rating and set the price target to $53 US there. And the analyst, Brian Bergmayer, argued that the valuation as it stands right now really does not reflect the medium growth potential there. The team also added that they're more constructive on the waste management space as a whole, pointing to it as a beneficiary of the Trump administration, given some of the corporate tax cuts that they're expecting there. They also said that shares have lagged over the past 18 months, mostly because of higher for longer interest rates and a stronger U.S. dollar, I should say. But that they argue that creates a more attractive entry point for the stock, given that they're expecting the merger runway and internal investment to give it some liftoff there, Andy.
Yeah, and just back to the AI, quite a day, isn't it? I mean, I opened my feed from the New York Times this morning and I couldn't believe it. Wow, the Chinese have completely undercut the Americans, apparently, on AI. Unbelievable.
Yeah, it's interesting, and so many analysts are comparing this to like sort of a Sputnik space race kind of scenario. It's really interesting comparisons that we're seeing play out. But yeah, this is the new, I guess, field of technological competition between countries here, Andy. I
hadn't even thought of it. It's kind of like a Sputnik moment. Yeah, the Americans were panicked when the Russians put that little thing up in the up in space. Thank you very much, Stephanie.
Thank you.
Stephanie Hughes of Bloomberg.